Good morning, traders. It is Monday, May 4th, and we're about 2.5 hours into the trading session. Tough to stay awake today. We've got a very lackluster day going on right now. I thought that might happen. I mentioned it in my pre-open market comments. We have China and Japan on holiday. Last Friday, we had a lot of European markets closed for holiday, so hit a little bit of a lull. We've had some negative price action, and you know that from my other videos. I said last week that how the market would react to major tech earnings would determine where we go from here. We had Wednesday set up as a really big potential day. The market was above the SPY 288 level. We were closing near the high. You can see this big rally here. We got up to SPY almost 295. And we've got major resistance with the 100-day and 200-day moving average coming in at SPY 300. A good number from Facebook, Microsoft, Twitter, Tesla would have fueled a rally and pushed us up to that major resistance level. The numbers actually came out good. They were really nice. What did the market do the next day? It sold off. And in fact, it continued to drift lower. But not to worry, because we have Apple and Amazon coming out on Thursday afternoon. So those results came out, and then whoosh, we fell Friday. Very soft price action. The air has been let out of the balloon, and stocks are continuing to drift lower. If we go into the daily chart, you'll see that we are starting to see some weakness. We had a little bit of a weak open today, and now we've been able to grind back and fill the gap and fall into this tight compression. You can see right there, that was the low from Friday. We've been able to get above it. Market's been gradually drifting higher. I believe that we are going to recover a little bit today. This is slightly bullish. You can see the 1OP indicator is declining, and we have a market that's gradually inching its way higher. That's what we call a bullish divergence. So I'm expecting a little bit of buying later today. One of the other reasons for that is that the markets overall are very, very quiet, so even a small bid can fuel the rally, and we have beginning of the month fund buying. So that should be a positive impetus. The market was able to bounce off of its low. It's been able to hold that support level, so buyers are going to come in and nibble. We'll go into that daily chart, get a macro picture of what's going on. I've had this upward sloping trend line that I mentioned. It came in right here, right around the 288 level. That was our horizontal resistance level. We've fallen back below that horizontal resistance and below that steep upward sloping trend line. And we'll put up the 100-day moving average, and I'm going to go to a weekly chart. You can see where it came into play at SPY 300. You can also go into the weekly chart and see how that was resistance. That was our target. In my daily comments, we shorted the SPY at 288 last Friday. I said place a limit to sell the other half at 286. So we're in. Our short position is established at an average price of 287 on the SPY. I think we're going to pull back. I'm looking at the coronavirus news, and everything is very, very sluggish. Consumers are not ready to jump right back in. Many are struggling to pay their monthly bills. I saw a poll where it said that half the respondents were not able to pay their rent for May. That's not a good sign. Another poll that indicated that the sentiment on how long this coronavirus is going to last and how long the shutdown is going to last went from 14% of the people thought that it would be over very quickly. Now 57% of the people believe that it's going to last 6 months or more. And the reason that that's significant is because that fuels consumer behavior and consumer patterns. A lot of people have the stimulus check from the government, but they're not rushing out to the stores to spend money because they don't know if their job is secure. And they're not going to go back to their old ways until they know that. I read a report this morning. Auto sales in the U.S. are expected to decline 27%. So we've been shut down for a month and a half. Car sales will be down 27% this year. All the official PMIs have been coming out. They've been single-digit numbers, which I've never seen anything quite like that. We have The ADP report and the unemployment report are going to be published this week. I question the statistics. I would trust ADP more because they actually process payrolls for small and medium-sized businesses. The government agencies are half open, so don't really trust their numbers, but we can expect some horrific results. ISM manufacturing was super weak last Friday. ISM services is going to be released this week. So we've got a lot of data points coming in, but they're backward looking. And I think that the data is not all that reliable. I don't believe that they're able to collect the data. We've never seen anything like this before. And to assume that the market is going to bounce and be back off to the races even after a $6 trillion stimulus package is unrealistic. We've got a lot of industries that are capital intensive that depend on cash flow, like airlines, hotels, so forth and so on, that are really going to be hurting right now, and they're going to need a lot of bailouts. The government may be there with money, but they're also going to be looking for some type of equity stake in exchange, perhaps in the form of warrants. Warren Buffett came out over the weekend. He said he's not allocating any money right now. He doesn't see anything that he's particularly interested in. So as this shutdown lingers and lingers, and as consumers become more and more cautious with their money, I believe that the recovery is going to take longer and longer. We could have some credit issues. We've got the European Central Bank now accepting junk bonds from their banks as collateral. That's how bad things have gotten. So I hope I'm wrong on the credit issue side of it, because if this house of cards starts to waffle, it could get really ugly, and this could last a very long time. We're not there yet, so let's hope that the recovery starts to gain some traction. We've got some states that are opening up, but for right now, I feel that we have rallied about as far as we're going to go. We had earnings that could have fueled us up to this major resistance level. We're halfway between the high and the low, so this is a natural resting point. But with each passing week that we struggle to recover, I think the selling pressure is going to build and build. We'll see another leg down. So, Pete, does that mean that we're going to test the low? I don't know. Does it mean we're going to take out the low? I don't know. Maybe are we going to make a higher low? I don't know. Right now, I'm waiting for clarity. I sure didn't get a whole lot of it out of earnings season because corporations are no longer providing guidance. And I don't know how consumers are going to respond once the economies are opened back up. So I have to wait for those pieces of the puzzle to reveal themselves. I will tell you that right now I'm looking to sell out of the money bearish call spreads, and I'm looking to buy puts when possible, but they're so dang expensive, you really have to try and buy some type of put spread. So the strategy that should work well in here is to sell an out of the money call spread to finance an out of the money put spread. So you're selling an out of the money call spread and you're buying an out of the money put spread. So I think that's a good strategy in here. You've got to be short premium because option implied volatilities are still very, very high. So last night, if you have subscribed to my YouTube channel, which I urge you to do that in every video and to turn on your notifications, if you did that, you saw my video on UPS. I went through, did some analysis. It was very easy to find, showed you how I conducted the search. And if you took action on the open today, the opening price was $91.79. And you can see that today, right now, you've got about $1.30 winner. It did go down to where you could have made $2 on that trade. So it looks good. It's a nice trade. I think transportations are going to be soft in here, and that's why we took the trade. We could see that in the daily chart. We have the upward sloping trend line that was breached. We had earnings and a negative reaction to those earnings. We also have softness across the entire transportation sector. NSC is a stock that I shorted this morning, did pretty well on it, made 80 cents on that trade, saw the weakness in here, shorted it, took my profits in here when the market wasn't going anywhere and the stock was flat. I thought, well, why would I want to take any additional risk here? Let's just close the position down. General Dynamics is another short that I traded today. It's got a very nice bearish chart on a daily basis. Also made 80 cents on that trade. Go into that daily chart. You can see this horizontal support level that's been violated. There's the earnings report, the B right there. Could not get through that 50-day moving average. Now it's through the 20-day moving average, taking out that horizontal support there. Overlay the 10 SI indicator, and we can see that it is weak relative to the market. Orange line below zero. This is our edge. This is how we trade. So to construct a trade for GD, you'd have to find a horizontal resistance point like that 130 level, and you'd have to sell a 130, 135 call credit spread. That would be a bearish call spread. That's the type of trade that you need to be looking for. I would prefer to sell something around that 140 level, but you're not going to get any premium. It's too far out of the money right now with the stock 15 points out of the money. And it's got some downward momentum. If you're a day trader or a very short-term swing trader, then you can look to the weekly options. I don't believe General Dynamics has fantastic option liquidity. I'm going to click on Stock ER. We can go in and see the option liquidity is -6. Not very good. So it's not worth me even going in and showing you a bearish call spread on this. I can go in and take a look at NSC. I believe that NSC also has fairly weak option liquidity, but that's the type of process that you have to go through is you've got to find that option liquidity and a stock that looks technically weak. So NSC, you can see the resistance up here at the major moving averages right around that 180 level, and the stock is continuing to back off. Ideally, you'd be able to sell a 180, 185 bearish call spread. If the option liquidity were pretty decent on that, I'd be looking to take $1 for that credit. I would be willing to put that trade on for a $1 credit. So let's take a look at a couple of stocks that are bullish. Again, I would not position myself on the bullish side right now. Not for swing trades for sure, but if we get some intraday market bounces, then I think these will be decent plays for you, and we could get one today, given that there's some end of month, beginning of month fund buying coming in. And we've got the market in this tight range. So let's take a look at Netflix. I like Netflix, and I believe that it's going to continue to move higher. The earnings reaction was okay, but then the stock pulled back and it gave up some of those gains. It checked this horizontal breakout. This is where we tried to sell a Netflix bullish put spread last week. We did not get filled on it. I'm a little bit bummed about that, but we tried. We just couldn't get our price. Now the stock is starting to recover. I believe it's going to grind higher. They had 16 million new subscribers. That's a company that's benefiting from the coronavirus. This is the kind of stock that you want to play on the upside when you've got a market bounce. Surrogate market position. Be long the stock when you think the market's going to bounce. CLX breaking through this horizontal resistance level, selling wipes like crazy and disinfectants to the extent that I believe they're cutting back a lot of their advertising. I recall reading that this morning, and they've already got more business than they know what to do with because the demand is so high that they can't keep up with production, so why advertise? But this is a beautiful breakout right in here. Check that news as well. I read so many news articles every morning before the open, but I'm pretty sure that's what I read. And you can see how the stock is continuing to rally. It announced earnings last week on Friday before the open. Had a muted reaction, but now it's starting to gain traction. This one came up on my strong after earnings search, and I've also seen it on my relative strength 30 searches. Let's see if it's in here right now. And no, I don't see it in there, but I have seen it in here throughout the course of the day. So this is what we're doing. We're searching for relative strength and relative weakness. Also take a look at that heavy buying search, see if it might be in there. CODX is a stock I traded this morning. I only took a 20-cent gain on it, but you can see it's been a real mover and it's got some nice strength to it. But the two longs that I would try today are CLX and NFLX. I would not try and swing anything overnight from the long side. On the short side, I've shown you a couple of stocks that I like. You know, I like UPS from the video last night. Caterpillar, I think, sets up well for a short also. You can see how the stock has pulled back today. Market has been rallying, and we're not getting any kind of lift in the underlying stock. And this is what I like to do is I like to have my SPY chart running in the background on a 5-minute basis, and there's the tail end price movement that I can always watch, and I can see how the stock is responding to the overall market. In this case, the market is pretty flat, but it has been a little bit higher. This stock can't get off the deck. It is relatively weak. It sets up nicely for a short. Heavy equipment manufacturer breaking down through this horizontal support. Earnings there. Long red candles closing on their low. Upward sloping trend line breached. This is a good short. I like it today, and I'll like it for the next few days. NSC, I showed you, I think transportation stocks get into trouble here. However, NSC, you've got a nice horizontal breakout here. Stock checks those major moving averages and is pulling back. You might find support here. This is not as strong a short as CAT. CAT is a much better pick. I do like GD. I think that's a nice one. Not liquid options on it, but you've got horizontal resistance here, horizontal support here, long red candles after earnings, breaking through that horizontal support. This one has been on a number of our different searches as well. You can see that relative weakness. I'm going to set you up with one more short here. ETN looks like an excellent short also. You can see this upward sloping trend line here. You can draw another one like that. Comes into play around that 20-day moving average, long red candle on its low, breaking that 20-day moving average and that upward sloping trend line right in there. So I think ETN also sets up well for a short overnight and a short today. And if I go into the 5-minute chart, you can see stock is still on its low, not able to bounce with the market. See, the market's been able to move higher, but the stock has not been able to. So giving you some really nice shorts to look at. CAT, I think, looks really attractive to me on the short side. NSC, GD, ETN, those are your shorts. CLX, NFLX, those look good on the long side. If you like this content, please give it a thumbs up. Make sure to subscribe to the YouTube channel and turn on your notifications so that you never miss one of these videos. If I see something that comes up that looks really good, I'm going to record a quick video and I'm going to post it. You'll be able to take advantage of that trade if you do that. Thanks so much. Look for a quiet day today. Normal trading should resume throughout the course of the week. We've got 150 S&P 500 companies reporting this week, so about a third of the S&P 500. The back half of earnings season tends to be boring, and I think that some of those companies are going to be struggling to produce a bottom line. So I'm looking for continued weakness on those earnings announcements. Thanks. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.